Morning, everybody. Soon to be afternoon on this marvelous Monday. Got some things going on today in the market. Seems like before the week ended last week that the stock market took a plunge after Chairman Powell's news from the Fed. And since then, Monday started out on a good foot. Let's check out what's been going on. On and on. Still down a little bit for today. Today's supposed to mark my aggressive week. Well, I'm gonna start. Not going to start attacking heavy when it comes to the stock options. I mean, I would like to, but if it don't work out the way that I plan on it, I won't be upset. Yeah, I won't be upset. Like right now, I'm in a stock option call saying that Starbucks would hit $77, and right now it's at 77.03. But my sell point is at 131, which should take me like around 200 bucks, 200 bucks even over here. So if I hit that, I'll be cool with that for today. Starting out for the day, let's get into some news. U.S. stocks rally after worst week in almost 2 months. They did have a great plunge at the end of last week, like I said, after well, two big plunges. One plunge was after Dr. Fauci was talking, before and after he was talking. Right when he was scheduled to talk, that's when the market got crazy. A lot of investors started selling out of stuff, and the stock market started to go down. But as soon as he got done talking and had a slight rise, um, and then a day or two later, Chairman Powell from the Federal Reserve, he came out and had a couple words and scared a couple folks with his words based off the prediction of how the economy is going to be going for the future and starting out or trying to adjust during the pandemic. And he thinks it's going to get a lot worse than what it is right now. And it's a lot of people that agree with him. And based off the analytics, we can agree, but we don't know until it happens. So, so this was from the Wall Street Journal talking about right now. U.S. stocks rallied Monday amid hopeful news around a potential corona vaccine. Because talks of vaccine is in the air, they got investors to invest again. The shares may recover ground following their big weekly. See, they want me to click on it. I hate clicking on it because it takes me up out of the screen. This week is almost 2 months. Oh yeah, weekly percentage drop in nearly 2 months. The S&P 500 gained 2.5%, while the Dow Industry averaged added actually 682 points. That's what's up. It's a lot of companies that are in S&P 500 and in the Dow. So as you can tell, most of the companies that I follow, I just started following this new one that I put at the top. It's believe it or not, it's Madison Square Garden. Madison Square Garden, even though sports have slowed down, they uh, they still have been in the green as an investor or a good investment, a company to invest in. And I mean, once they get going, if you had some money, I would say put some money on Madison Square Garden because their yearly high was like, yeah, $316 per share, and right now they are at 164. So even if you was to when you sign up for Robinhood, even if you were to do the fractional sharing as a commercial real estate, I would have Madison Square Garden um, a part of that pie during the fractional sharing. Now, I'm not sure if Robinhood does the pies. I know it has some type of chart where you could follow the fractional sharing, so you would know how much money is being allocated to where you want to put it at. But one company that I do invest with doing the fractional sharings, who I started doing with it first, was M1 Finance. And you could, if you're interested, you can go to m1finance.com. And cool thing about them is they're user friendly when it comes to Android phone or iPhone. So you can go to the App Store, Google Play Store, and install their uh, their app, and it's just as friendly on the mobile device than it is on the computer. So Madison Square Garden, even though they are a sports corporation and they are a great a what you call a commercial real estate, this would be a great investment starting out doing the fractional shares. And when I speak of fractional shares, if you ever sign up for Robinhood, one of the messages that you'll get is introducing fractional share. Invest with as little as $1. So basically, you put in $1 and you get to see the percentage of that dollar and where it goes. So if you was to have the best example I would like to give is if I took $10 and I picked Madison Square Garden, Starbucks, Micron, Slack, and AMD. Just these these five companies that I have at the top of my watch list. Those five companies, what I would do is I would put my $10 and I would have $2 going to Madison Square Garden, $2 going to Starbucks, $2 going to Micron, $2 going to Slack, and $2 going to AMD. So it looks like my call just sold, and with my call selling, looks like that just put me barely at 199.13. Started out at 189 or 182. I started out at 189. Boom. So my call just sold. I could tell because it just disappeared right here. And I got a message alert on my phone saying, "Hey, your call sold." So I'm gonna pick up another uh, options trade before closing because I'm all out of. If we go back to my account and I see I'm all out of day trades right now. All my day trades are full. So what I'm gonna do, I got a day trade opening up in the morning. So what I'm gonna do is I am going to come up with a strategy to um, buy another contract before the day ends, and then after the day ends tomorrow, as soon as the day opens up, I'm gonna sell that contract and then do another a day trade to try to make up for some of the loss that I've incurred. So the plan is still in the works. Hold on one moment, y'all. So next, we're gonna go over some more news. If you have interest, hold on. Before we go over more news, I want to say, if you have uh, interest in some of the most glorious stocks, I wouldn't say glorious, or the most pricier stocks, but don't have, or you don't want to put that amount of funds in it just to buy a share, that's where the fractional shares would come in handy. So if you were interested in like a Google, Amazon, the good thing about those fractional shares, the once you start investing in fractional shares as a as a shareholder of that company, if that company pays out a dividend, you will receive a dividend each month or each quarter, however they pay out dividends. Because there's some companies that I own shares of, they pay out uh, monthly, and it's like two or three companies that I own shares of, they pay out quarterly. And being in the season that we're in, with a lot of businesses uh, going out of business, some of them, if they first, one of the first things that they give up uh, before they go out of business is their dividend yield. So it's a few companies that stop paying their dividend because basically they can't afford it. They stop production. Their workers are no longer coming to work. They're no longer making money. So one thing that they did give up was that the dividend. So they cut the dividend until they could at least get back on their feet. If they get back on their feet, we don't know. So you could take companies like Spy, Apple, Google, Amazon, and one thing about the fractional shares purchasing, you could really diversify your portfolio. So you could have some financial stocks. You could have like some banking institutions like Bank of America or PNC Bank or US Bank, and then you could turn around and have a Google and an Amazon, and then you can have a little bit of Microsoft, and then you can have the S&P 500 ETF, which is SPY right here. You could put SPY in there, or you could put some Vanguard in there. I like Vanguard. Vanguard is like the good player that has a whole bunch of championship rings that you forgot that he had that many rings, like a Robert Ory or a what's my man name that used to play for the Spurs? Tim Duncan. How Tim Duncan? I like how Mike Epps explained how Tim Duncan got his four rings. He said he got the quietest four rings. And then he holds up his four fingers and slides them right back down like I got them, but I don't want you to know that I got them, but I got them as proof that I got them. Um, Vanguard. Vanguard has a few ETFs. The one that I like is called QQQ. And one thing, the reason that I like QQQ is because QQQ also has a short ETF too. It's either SQQQ or QQQS. I'm gonna see if it's in here. SQQQ. Nope, that's not in there. How about QQQS? There it is. SQQQ. So this is basically the short. It's basically saying it's going in the opposite direction. Instead of investing in QQQ saying that it's going to go up, SQQQ is basically saying that the stock is going to go down. And the reason that it's going down right now is because the stock is not going down, it's going up. So if you go back to QQQ, you get pretty much see that this is going up. And it has a lot of investors investing in that. This is one of the ETFs that most a good portfolio that's in a 401k would default in. You have any interest in getting a free stock? You can get a free stock today using a link that I'll share out with you. What this will do is it'll give you a free stock. It'll also give me a free stock, which you just opening an up account with Robinhood. 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 And while I'm going over this investment news and updates that I do, just with the moves that I make, you could of course follow on Facebook if you have any interest. And I recently just tied the stream to my YouTube account. So if you're looking for the YouTube channel for investors for beginners using Robinhood, you could look me up at GSG Investors on YouTube. Just started out, so it's gonna be a little shallow. Let's see if we got a little bit more news. So this was just out 45 minutes ago. Yeah, don't really want to hear any bad news. Murder is always bad news. See if there's any more. So top movers for so far. Looks like Aurora Cannabis had a big surge from last week. They're 63% up just starting from this morning. Um, this would have been a great buy 2 weeks ago when they were at $10 a share. It might have been a month ago they was at $10 a share. Right now they're at 18.03. Yeah, last week. Last week they hit bottom. So just 5 days ago they were at $5.70, $5.80 per share, and they have tripled that since. And it looks like they're going to go on a grand rapid spree. I actually some analytics that I read from Motley Fool actually had Aurora Cannabis uh, as a good and top investment marijuana stock. I just didn't want to have. I didn't want. I knew it would. I thought it would be a good investment. I just honestly I didn't want marijuana in my portfolio. They do other things other than marijuana, but as it says in the name, their target is cannabis. They do pharmaceuticals as well, and I think they're based out of Canada, Alberta. Yeah, last week they was at 570 and 580, and now they have tripled that. Let me see what would yeah. So to invest in a call put option. They don't even have a strike price for 18. That's how much they've been moving. So last week, they were at $5 and now they're at 18. They don't even have a call price for um, just going to 18. They stop at 16. So they're outperforming their analytics window. That's pretty cool, Aurora. ACB. So if you have any interest in a good cannabis stock, this would be one of the ones. Let's check out another big mover today. Crescent Point Energy. This is a good penny stock. I believe they're in. They deal with oil as well. Like I said, if you did any investments in oil and you came across some companies like I have and caught companies on a low, like for 50 cents and under per share, uh, check your emails. Make sure that those companies are not going out of business. It was one company, Whiting Petroleum. I bought like 100 shares of Whiting Petroleum because they hit like 34 cent one day and 38 cent the next day. So I bought 50 one day and 50 another day, and I spent uh, under $40 for 100 shares of stock. But I received an email last week that this company plans on uh, they plan on filing for bankruptcy. So with them filing for bankruptcy, it could work out in my favor or it could not. So they basically giving me an option to make a few moves. But since I bought them, they've been up. Uh, They haven't been down to 34 and 38 cents anymore. They actually been up, and where they're at right now is they're around $1. Whiting Petroleum. Let's check them out. So Whiting Petroleum is WLL. I'm pretty sure I have them in my watch list. Yeah, they're at 106 right now. So they're actually on a high from last week. Last week they was at 90 cent. So right now they're at 107. So even if I was to sell right now, I would still have a gain because I bought them at 34 and 38 cent. So another top mover. Uh, so Crescent Point is a top mover percentage wise because they went up 40%. Same thing with Aurora Cannabis. They went from being at $5 a share and now they basically tripled that. But since this morning, they've been up 62%. One thing that I find that is weird is right before a speech or update is about to go on, the stock market it plunged last week, but it's like every once in a while there's a talk of vaccine. When vaccine is the talk of the town, it gets hopes up, so investors start pouring money right back into the stock market. So we had a great surge this morning, and for an example, I like to mess with Starbucks a lot. Starbucks, they started out this morning at $67. They opened up at $67.87. The reason I find that weird is because how they closed last week. So when you look at Friday, how they closed at $74.16 last week. So they opened up almost $2.60 higher than what they closed on a Friday. So early when we started 2 weeks ago, there was a question uh, about does the stock market correct itself, going back down to a price where you could buy it. It always corrects itself at least once a month, according to a very wise brother named Ian Dunlap with Market Money Mondays. You can actually catch him with Earn Your Leisure on. They have a show after the market closes every Monday to go over good buys, great time to buys. But he'll give you more information only if you are a part of his group. His group is called Red Panda. But they're not going to talk about like option trades. It's specifically or day trades. It's specifically buy and holds because to gain wealth is to gain compound interest over time. You take $50, you invest it, you look at it in 2 years, that $50 then turned into 2 grand. Compound interest. It's always going to grow substantially when that interest is compounded over time. So just imagine if you was to allot $50, not one time, but $50 once a month. You pick some good growth stocks, good growth stock companies. You buy shares in them, but you buy shares in them at least once a month. Now, his one of the smart things that he explained is you want to set this money aside each month, And each month during the time that these companies have their correction week, you want to buy during this time because the other 3 weeks during the month they're going to surge up and they're going to keep getting higher, and the percentage is going to change each month or each quarter. So that's something that I plan on doing. That's the reason that I started doing a trading options, because what I'm doing is I'm using the gains that I get from trading options each month, and then at the end of that month, I'm gonna take my gains and I'm gonna buy more stocks to hold so my portfolio can grow. Now, this is investing for beginners, because if you just start, that is a beginning. There's enough money out here for everybody to eat. I say that all the time. It's enough money out here for all of us to eat. We can all get it. All right, let's see what else they got. Top movers. Ooh, this is not good news. They're still going up, but I can see them going down, and they're going to say that the reason that they went down is because of this news right here. Uber to cut 3,000 more jobs. So you ever watch football or a basketball game, and a referee has made a call against the team, and if that team loses the game, um, a lot of analyzers or critics say they lost the game because of that call that the referee made. This is a call like such. Uber cutting 3,000 more jobs. So if they were to have a bad week uh, after this for the month of May, they this would be the blame right here. The cutting of 3,000 more jobs. But right now they're in the green. They're actually up 7.21%. Now the top mover is Novax. Novavax. They're up 36%. Let's see what they do. So I think they're a pharmaceutical, but I'm not sure. Novavax Inc.'s common stock. Novavax operates in clinical stage biotechnology company which focus on the discovery, development, and commercialization of vaccines to prevent infectious diseases. Yeah, anything dealing with vaccines. Everybody's trying to get the a hold on the vaccine as quickly and as soon as possible. Uh, Especially like the Gilead group. Gilead group is trying to get a vaccine first so they can make that guap out that vaccine. Anybody that's attempting to have the vaccine for the coronavirus, sad to say, but they're going to capitalize off of it. So even if you were to pick a fractional shares and throw uh, Novavax in there with Gilead and another pharmaceutical company that says that they're looking for the vaccine, looking to find vaccine for the virus that we're in, they're gonna make some guap. Oh, I see why they going up. They going up because they about to have an earnings reading. So, uh, Ian Dunlap always said that whenever a company is about to have an earnings reading, basically either for that month or for the quarter, displaying their earnings, most likely it's for the quarter, that right before the earnings reading starts, that they're going to have a surge up, and then after the earning reading stops, that the price surge will go back down. So this is going to make a small hill because they got an earnings reading coming up on the 20th at 8:30 p.m. And so after they have their earnings reading saying if they hit their goal or not for the quarter, that's when it's going to start to make that downhill. Won't be a big downhill, but it'll be a small one. But that's why they're having their surge up. All right, let's look at, that's another biotech company. They're up 29%. Thanks for checking this out, guys. If you check this out, I'll make sure you guys can watch it from the beginning if you want to go back. I'm currently at 211 cents for the total buying power. This biotechnology company is at 39.29. Let's see why they're going up. See, they already had their quarterly reading, so they should be slightly going down here soon. They're going down slightly right now, but even for today, they're still up over 20%. See, this would be a good buy right now too. So right now they're at $39.22 per share. Their weekly high is $75 per share. Not a weekly high. Their yearly high, 52-week high, is at a $75 per share. And they, during the I want to say March is when they hit their lowest. Or was this February? Yeah, February is when they hit their lowest. So February they hit their lowest. It says their lowest was $11.65 for the year. But right after February, after the news first started to spread, they had a surge going up. And then after they had that great surge up, they had a plummet down, 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 down. So this would, I think this would be a good company for a fractional share. Look over the whole year just to see when they had that great drop. Looked like it was back in November, December. Looked like December. So their drop wasn't due to any circumstance. Their drop, their low point was basically because of where they started out at. And it looks like with this being a new company founded in 2016, and they probably a new IPO because we don't have anything before October the 11th of 2019. Yeah, they are a new company to the market, but even as a new company to the market, they have done exceptionally well. But it makes me want to erase everything that I've said about this company so far because they don't have enough stock market history to go off of. Even with their weekly high being at $75 a share and their weekly low being at $11.65 a share, it's not enough to go off of as a long term investment because they have not been around long term. So I'm gonna go to something else. Let's see. So those were the top movers, the top four movers for today. Of course, they got more. I clicked on more. So right now I'm undecided in which way I'm gonna go. I don't know if I'm gonna stick with Starbucks or if I'm gonna go with MU, AMD, or work. Uh, Tech has been keeping a lot of things alive so far when it comes to the S&P 500 and the Dow Jones and the Nasdaq. Tech has been keeping uh, the market alive so far because of a lot of companies had to press pause because of quarantine. We all been in quarantine, so there's a lot of companies that are not coming back. Work or Slack has been down since the opening bell. They opened up at $31.25 and their high was just 15 cents higher than that, and their low was $30.14 just for the day. It's really weird to see Slack and AMD to be as low as they are right now with all these other companies. Even though AMD's in the green, they're still making a funny shape on their chart. So $54.86 where they started at. Their daily high was 55.25, and their low was 54.25, which would be a dollar range. That's a great range for a day trader. Give you some wiggle room to work with. And right now they're at 54.64. So I don't know. It doesn't look like they're going back up. If I hit expand and I change the bar line to candlesticks. So according to the candlesticks with the little red right here, according to that, based off of that pattern right there, looking at it, if it starts to do this right here, another red one beside it, yeah, it look like it'll be aiming down for another move. Green, 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 green gives it a good. If you know anything about candlesticks, I normally don't use candlesticks because candlesticks kind of it throws off my prediction. So green, green normally mean it's about to go up. Red, red, or amber, amber normally mean it's about to go down. But then they have things like this. How you got green, green, and then red, red, green, green. And you would think it's about to go up, which it did, because it started out uh, or it ended out on a high, and it started out on a high, and then it was green, 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 a little red. That's because it flattened and it started to stagger. Then it went up a little bit more green, red, 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 red. Normally mean it's going down. Then it went down. Red, 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 red. And green, green went up. And you would think it was gonna go up. It was red, green, green, red, green, red, green, green. So I normally don't like the candlesticks, but If you analyze charts, and it's better to use a bar graph than it is a line graph. Candlesticks is the way you want to go. I normally just keep it on the line. That way I can see it, making it shapes. It's ups and downs in real time. Looking at the candlesticks in real time is pretty cool looking, but still kind of hard to predict, just based off of how I think. So we look at the 1 day and those candlesticks, just basing off of how they started out with the futures market. Future market put it up pretty high, which lets a lot of investors, if they had any shares that they wanted to make some money off of, it'll be a good time to sell then. That's why they went down. A lot of investors just sold, 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 sold. So I'm gonna switch it back to line for me, and I'm gonna go back. So looking at AMD, if I wanted to know how much AMD is doing options trades for, look like options trades are high starting this week. Um, so just to put in a call saying that AMD is going to go up to $55 from where they're at $54.60. It would cost 111 just to put in a call saying that they're going to go up to 55, which is pretty high. I think that's a lot of money. How much do I think it should cost? I think it should cost between 55 and $70 for that call. With it just being $55, I'm not going far now, but that's just me. Just going 40 cent up. I think that's too. That's a that's a high price for that. So, due to the price of what it costs to do options trading, kind of kind of tells you the volatility of the market. When I bought an option earlier today using Facebook, I said, not Facebook, using Starbucks. It said Starbucks was going to hit $77, but I had them sold. I had set up my call option to sell around $77.11, $77.12. That way, it would take me over the $200 mark on my buying power. So when I did that, I think it cost it's like 170 or 160. It was weird. I know it was high. So right now since we're over the $77 mark, they're saying if you think it's gonna go to $78, this would be the price of the call, which would be 80 cent times 100 shares for this contract, which would be $80, saying that they're going to go up to 78. And if they make that 78, um, I think it would go up 50 more cent. So you could potentially sell. So if you was to buy this option for $78, saying that it's going up for $78, and you was to buy it for $80, saying that it's going to go up to $78. If it hits 78 from the purchase point that you purchased at, you basically could sell it. You could put in the time that you wanted to sell it, not the time, but the price that you wanted to sell it at. So if it hit $78 even, as soon as it hit $78, you could basically add the $49 to your 80 cents, which is 129 cents, or $1.29, and you would sell that call option for $129, which would give you a gain of $49 just doing that stock option. That's an example. Just an example. Put options. Put options a little bit higher because it's at $77 a share right now. So saying that it's going to hit $77 when it's at 77.01, yeah, of course it's going to cost a little more because it's already pretty much close to it. So just messing with Starbucks. Starbucks is always my go-to because I drink coffee, so I like to invest in what I mess with. Same thing with MU. I have some MU microchips. Look like I got about 8 minutes, and then I'm gonna sign out, and then I'll give you guys an update tomorrow on what the next moves are gonna be. Micron Technology. They're in the green because their stock movement is up right now. They opened up at $45.81. They're high, but it's just 11 cents higher than that. $45.92. Their low was $44.95. So that's like a dollar fluctuation for a good day trader gain. These are good day trader moves right here. So their weekly high is at or their yearly high, I should say, 52-week high is at $61.19. So if I was to take 10%, $61.19, there would be $6.20. I'll round it up. Round it up. So let's do $6.20 times 3. Boom. 1860. We take 1860 away from 1860 away from $61.19. We got 42.59. So when this stock hit $42.59, it was a great buy. Let's see, when did that happen? So last week we got, looked like it happened last week, May the 14th. May the 14th was a Thursday. So the down time to invest in this specific company to start buying stock was last week when they hit $42.68. So what was that exact number? $42.59. So the closest that you got to that number was last Thursday at 9:40. Let's see if any other time they got that close. So as far as the week, they haven't got that close. As far as the week, let's see. As far as the month, look like then the month of April was the last time that you got below that point. Why did I do math like that? Because from a 52 week high point, you always want to subtract a 30%, because 30% from the 52 week high is always going to be their low or their correction price. So the if the stock on a 52 week high is $100 per share for their 52 week high, that means their stock correction point to buy in would be at $70. 30%. Subtract 30%, and that's where you want to buy it at. As close to that 30% mark as possible. So last week they had opportunity for you to jump in and buy Micron with their 30% loss last week on Thursday the 14th, when they were at 52.68, and that was 10 minutes after the morning bell sounded. So just to give you a heads up, and it's like that with mostly all companies, especially if the company is still growing. So right now I'll take Starbucks for instance. I think Starbucks hit that they almost hit $100. I think it was back in December. So we look at their, yep, they almost hit $100. So their weekly, just going off of the information I just said, their 52 week high was $99.72, and to invest in them for the long hold would have been, yeah, would have been last week, same day, Thursday. They hit $70.86. When we look at the month, they had to do it more than once, right? So anytime they're around $70, that's the buying point. So their 52 week low, of course, when back in March they hit $50.02 as their 52 week low. Of course, that was a excellent time to buy. But right now, with things going back up on the up, it would be a good time to buy right around 70. Shout out to Ian Dunlap again, and shout out to Jason Brown with the Brown Report. He gave some analytics yesterday. Was it yesterday? It might have been Saturday. He was live, and he was talking about interest on loans, how loans are not going to be as forgivable as people think. And when it comes to receiving unemployment, um, that you also have to pay taxes on that unemployment. So be aware, beware. You're gonna have to pay taxes on unemployment. Unemployment and you if you're unemployed and you file for unemployment, put some money away from taxes because they are going to charge you for taxes, even for the extra that they say they're going to give us, you know. So that's my time, y'all. I'll give another update tomorrow. We're still going to attack aggressively this week. Uh, be sure to care for the ones you love and love the ones you care about. Until tomorrow, peace. Y'all be safe.